Good afternoon, traders. Joseph here from Eightcap. Today's report, we're going to have a quick look at the dollar Swissy, which is in front of us, gold and the Euro USD, and we'll finally just touch on the AUD USD. So overnight, you may have noticed a very sharp move from the US dollar higher. That was after this morning's FOMC, and the shock to the market was that rates possibly seen as increasing earlier than expected. This came in a bit of a surprise, and the other question that's being asked is, if rates are being suggested to rise, how is the current outlook on inflation, which is seen as short-term, stacking up with that view, and is inflation actually a bit more of a longer-term problem? Now, also the question is raised around tapering. Will we see tapering come in play, and if rates are going to go up, and what is that going to do with the current bond buying program? There was no comments made about that this morning, and there will be a fair bit of interest in that moving forward now that there's been a new ace has hit the pack. So looking at the USD to the Swiss franc, we are basically trying to just work out now, that is last night's this morning's influence just a flush in the pan, or is this more long term, and are we going to see continued long term influences support the USD and possibly set up a new short to medium term rally? So we can see this long downtrend now that we've been starting to see a bit of a breakout from. Now it's a very, it's quite a strong move, and we have a pretty solid trend break there with a double bottom. We have a higher low from this lower low, and now we have our first initial breakout. So this is the area here we're watching at the moment, which is the 90-40 area. If we do see any reactions lower, we'll be hoping to see that level come in as support. If we do see price move back inside this range here, that could be seen as a small worry, and it could start to discount this move here. But this will again, a stress come down to influences going forward that are positive to the US dollar and are going to support it in its continued move. So technically there are some good signs there that we could see a short to medium term rally, but we really do need to see some follow through now. So what an explanation of that could be a move lower, a new point of demand is found, and then we see a new rally out breaking this level here, which is current resistance at 90, 94, 95. So if we do see a move lower, we would like to see a break of this level, just to show that buyers are really in control and there is momentum on their side. So moving over to the Euro USD, we can see that extremely sharp move lower, which is just a mirror image to the downside of what we saw in the dollar Swiss franc. We are seeing price starting to show the small signs of demand from previous level of demand here, which kicked off that extension of the rally, and that level does line up with some previous resistance, which is all good signs on the technical front. And that is the that 120 area down to that 1.1990 area. So it would be, if we were going to see a small pullback as profit takers set out on USD, we'd like to see that level hold. If we do see a rally and it forms a new lower high, as we see it here and here, that would be a worry. If we did see a move back down to this level and a break of it, that would start to show that ideas US dollar short to medium term trend could be setting up underway, and we will see a continued extension lower of the Euro USD. So we can see here this trend break. We have the higher high here, but we do have a higher high / lower high here if we incorporate that trend break here on this rally. So now we're just going to go over to gold, and we can see with gold it's a virtually similar story as the Euro USD. We have demand setting in from a previous area which kicked off a new extension. We do have a series of lower highs and this very sharp decline, finishing with yesterday's sharp move lower. Both these bars on the Euro and gold could be seen as exhaustion bars, so we'll need to give some time to price to sort of show us the next signal, and potentially if it's going to be set up a new move lower, or if we do see a new higher low, after we do see a move up and a move down, that is a sign that buyers are potentially starting to set up some support. So the key is going to be what happens on the next retracement lower after, if we do see this hold here. Now, if we do see a break of this level today, that would then we'll be looking for this low to break and possibly a move down to test just some of these areas inside here, and that has potentially could set up some demand from buyers, but we will just have to see what happens later once London comes online. Now finally, we're just going to have a look at the AUDUSD. Now there's quite an interesting level here of demand that's been in play since the first, going back to February this year. Now we can see that level here, it's at 75.80 and it runs up to around 76.35. Now this level has been really strong and has held a lot of attempts by sellers, knocked them back. Going back to February, we can see the first one here, we had another test here, another test here, again here, and a few more here before we had that rally develop. Now we're having another test back into that area after yesterday's move lower, which wasn't as strong as what we saw in the euro and gold, but again, that's the area we're looking to see hold. If we see sellers move back down to this point here, we'd then be looking to see if buyers can return to the market to sort of salvage this level. But if we do see a new lower high setup and a new thrust lower and a break in this area, that could be quite significant for the Australian dollar. Now another factor that is weighing on the Australian dollar continues to be commodity prices and China. We all know some of the headaches that are going on for the Aussie dollar with China, and it's sort of a cold trade war that's in place at the moment with some export bans, and some of the conditions have been put on Australian exports which weren't there previously. The new one at the moment, which has been developing, is China is still looking to try and control some of the commodity prices which have been trading at extremely high prices and which are becoming a point of concern in Beijing, and we'll have to continue to monitor if that's going to continue to put nerves on the Australian dollar as more news comes out from that as we move along. So the other thing that sort of helped the Aussie today was some strong employment data, but we are seeing a bit of a pullback at the moment, a fade developing. So unemployment dropped to 5.1%, which is well above expected, and employment change came out a very healthy figure, which is well above what expectations. So that's it for today. We hope you enjoyed our report, and thank you very much for your time, for listening and watching. And please, if you want to keep up to date with all our latest news, please follow us on Twitter, Facebook and Instagram, and I hope you enjoy the rest of your day and good trading.